Now let's take a look at the bigger picture. Joining me now, Mish Schneider, Chief Strategist, MarketGauge.com. Great to see you, Mish. I mean, just a week and a half ago, we had markets at all-time highs, like the S&P 500, for example. And we have seen some of the names in the Mag 7 hitting new highs, but we've had a lot of volatility, too. What do you make of this year so far, and how is it helping you to decide what to do, how much risk to take, et cetera, for 2025?
Well, for one, to start on an optimistic note, this has really been a trader's paradise type of market because a lot of the money has flowed out of typical index funds and into individual stocks and sectors. And so for somebody like us, who has obviously quants that do its thing following momentum, that's been successful. But as a discretionary trader, essentially you want to have the same philosophy. Focus on a few themes that you know are going to do well regardless of what headlines are saying. And then after that, really basically following the price. And if you do that, even though we had the huge down day Monday, obviously there were a lot of things that turned around. There were things that opened okay and continued to go higher. And a day like today, you'll have new information, which is the market's up, but anything that closes in the red probably gives you fair warning that those would be the instruments to be avoided. So yeah, it's more active trading, but I think that's going to be the successful formula for this year.
Right, understood. So tell me more about how and some of the names that you're picking here, because you often have picks for us. We're going to go through some of the names, but is there any sort of theme behind them?
Well, commodities, let's start there because we have talked together for many years now, and I've always talked about gold. And yet it's still so incredibly ignored by investors, which is amazing considering it's at new all-time high. But it's not just gold now. Silver's catching up. Copper actually starting to turn around. A lot of the food commodities have bottomed. And even oil is still the kind of that X factor depending on what happens over the next few weeks with policy. But essentially what we're seeing is commodities rising. And this is after a Fed pause. This is after a stronger dollar. So it's sort of telling me on its own fumes. So that should really dictate a theme for you. Number one is what if inflation comes back? Number two, with that, you have to watch the bonds because with headlines making the market so skittish, the bonds are going to tell you just how confident or nervous the Fed becomes as a result. And right now, I'd say uncertainty is what you're seeing in the long bonds. And then after that, you have to think about what's made in America because anything that's going to get a pass on tariffs is probably the best places. So that's why we've been investing in the vanity trade that I've talked a lot about, the diet drugs, some of the other aspects of the diet drugs in terms of the ripple effect, healthier eating, more exercise, dating, even Match.com has started to go up this year. And from there, I'm going into things like EVs made in this country or manufacturing that's happening in this country. And really staying a lot away from AI unless it's more software-based and more United States-based, like an IBM, for example.
So do you feel like I do want to get to some of your picks that you have in the vanity stock. You mentioned Match, but, in the AI trade, do you feel like some of those names have just run up too high? I mean, which names are you sort of avoiding lately? Because you feel like now it's just they're overvalued or it's sort of too late to get in and maybe you'd find something better at this time. What would be a name that's overvalued?
Well, I mean, I might get some slack on this, but Palantir is a perfect example. I mean, this has been a spectacular move, and happily, we've had money in that. But for me, again, looking at it from a discretionary standpoint, that's not what interests me. What interests me now is if we're really broadening out, what are the AI names that may benefit, that haven't really benefited so far, which is why IBM turned out to be great. And a sleeper nobody paid any attention to had fantastic earnings, gapped up, and has basically been consolidating at higher levels. Same thing with Salesforce. It's probably waiting a little bit to break out, but that would be another one to look at. And maybe some of the old names like Fastly, which is cloud computing. So this is where I'm interested, not so much in the high flyers that have already made their moves.
Right. So let's get to some of these. I mean, you had biotech, sort of pharma, and vanity stocks, which had Ulta and Match. What were the biotech pharma names that you had?
Well, the biotech, again, there's two levels. There's immunology, and then, of course, there's things that have to do with more of the vanity trade. So immunology, but also has its hand in vanity trade with Botox, would be AbbVie. It's one of my top picks. And again, that already reported. It reported well. It made a gap higher, and now it's consolidating at these levels, which means to me, unless the market falls apart, or if it falls apart and that doesn't, good trade. The other one, of course, would be Novo Nordisk, which is directly Wegovy. And I just think that more and more people, in spite of the costs, are looking at that as an alternative. And even though the stock is down, it actually looks like it may have bottomed out and may be providing a brand new opportunity here if it stays green again on a day like today, where lots of stocks are going red in that space.
Okay. And Ulta and Match were in your vanity stocks. For EVs, I saw an incredible Rivian, and I saw that that's your pick for today, a Rivian near my block in Midtown Manhattan. And, you know, it was sort of a combination. In the front, it looked like a Bronco, and the sort of center of the back looked like a Range Rover. It was pretty cool looking.
Well, you know, Nicole, what you're describing really is consumer instinct, right? If you start to see more Rivians around, what does that tell you? But on top of that, I really like, even though it's gotten beat up a little bit lately, it keeps coming back. So there are buyers out there. Like today, it's trading in the green, and I'd like to see it get back over 13. But they made some awesome deals. They're made in the United States. It's a good car. Car and Driver raved about it in terms of customers, good customer service, because they actually come to you if you need servicing. And yeah, it's a pretty damn cool looking car, like you say.
Yeah, it really is. And then you said names like Fastly, Salesforce. Those are names that you like. IBM is in there too, and that had a recent run-up and good report. Actually had its best day since the dot-com era.
Yeah, and so imagine how happy I was, because I've been touting that stock a lot, and here it goes. You know, big, blue, boring, not so much right now.
And so in the big picture, how much do the tariffs matter? Because you said you are picking manufacturing more here at home. You're trying to pick things that may be a little more tariff proof. You are worried? Is it the uncertainty part?
Well, I think at this point, the uncertainty, we sort of are seeing the MO here, which is start with some very, very high, possibly extremely pressuring demands, and then negotiate. And that's kind of been the tactic of the Trump, even back in the first administration. And so that's why you have to really ignore the narrative and the fundamentals and look at the price. So where tariffs concern me are the stocks that have not been able to recover as a result of the potential of tariffs, and those that are recovering in spite of, like, let's talk about China, for example. So if we're looking at emerging markets, let's say, that would be a concern. But if you look at Brazil and you look at Latin America, two very rich countries, they're actually doing okay in the spite of. And that's why you got to watch price. This is all about price this year. If you like a non-tariff impacted commodity or a company, or something that is tariff impacted, as you would think, if it's holding up and it's breaking out, that's really all you need to know, that and the risk. And then the narrative will change accordingly.
And I did hear one guest today thinking that the Fed will cut in March. Where do you stand on what the Fed may do?
Well, that's interesting, because I actually, in my Outlook 2025, wrote the exact same thing, that I'm looking at March. And I don't know what this guest said, but I'll tell you why I think so. I think the Fed, especially Powell, was pretty clear in his last conversation after the last FOMC, which is basically, what did he say? I think inflation may not get to 2%, but I'm not as worried about that as I would be if we start to see a slowdown in jobs. And of course, we have a big number coming out on Friday. And I don't think one number would make him jump. But if we start to see a slowdown in the labor, he's basically saying, all right, maybe I'll do something then. So, you know, that's why March could be a pretty reasonable time frame to look at. And the JOLTS number came out today, suggests maybe somewhat of a softening, and we'll see what happens on Friday.
Okay, Mish Schneider of MarketGauge.com. Great to see you, Mish. Thank you very much, and a Happy New Year. Appreciate it. We haven't chatted yet. Thank you. Coming up, Options Corner. Tom White is standing by. He will highlight unusual options activity from the day, how investors are looking to trade on recent news of Walt Disney, PDD Holdings, Netflix. Stay with us. We'll be right back.